happy to be here today just to give a CEO's address and provide an update for shareholders on where the organisation is at today and where we're looking to head towards the future. So thank you for that. So if we just start at the beginning and look at where is Fertoz today and what's our mission and vision, and fundamentally, you can see there that we want to become a leading provider of sustainable agricultural inputs and a global driver of nature-based carbon solutions. And so two very, I'll say, distinct businesses that really are still connected, particularly at an agricultural and grower level, when we look at the fertilizer products we're offering and the carbon solutions that we're also providing to the market. The two divisions are obviously at different growth stages, and fundamentally the business was developed off the back of fertilizer, and that's what we're very much focused on today. But at the same time, we certainly see the opportunities and the demand for nature-based carbon solutions, and we're endeavouring to progress those projects and bring some significant changes to the market in the coming months and years on those two aspects. So really, as I've mentioned, two very distinct businesses here, but also connected, and I'll go into more details on that during the slide. So if we just move to the next slide, really what I wanted to focus on today was to really give people an update on what has the last 12 months entailed since I arrived at the organisation, and what are the changes that have been made to make this company more successful than it has been in the past. And I think one of the things that goes, I'll say somewhat unnoticed because it doesn't sit on a balance sheet or a P&L, is the amount of time and effort that's gone into developing the team here at Fertoz. As you can see there, those red stars are representing people that have joined the organisation in the last 12 months. There's been a very, I'll say, significant shake-up of the skills and the expertise that we believe are provided to take this, to take this organisation to the next level. And so I'll say we've been really successful. It's always easy, I'll say, relative, to let people go. It's much more difficult to find the right people to replace them with. And I think that's been a nice win for the organisation in the last 12 months, is some of the talent that we've brought into the team, whether that's mining operations with Dylan Treadwell, Emma as the group CFO, Ed is starting with us as the logistics manager on Monday, but also the sales team in particular, Paul Peterson, Werner Pienaar, who are bringing a really different dynamic and strategy to the table, which I think is what's going to make us a success moving forward because of their knowledge and expertise around the markets that we're in and what we're trying to develop. So that's been it's been a 12-month project, no doubt, and really starting to bring that team together and operate as one organisation with very clear goals and objectives. And I think that's been a big win for the organisation in the last 12 months. Still, we need to execute, no doubt. We've got the people to do that with. So if I start with the fertilizer business first and look at where is the future success coming from, where are we positioned today? And I think the first thing to say is the macroeconomics, as they were 12 months ago, are still very much in our favour. We have really tight supply chains coming from the fact that Russia, Belarus, are consistently at war with Ukraine, as we know. The Chinese have still blocked all trades of phosphate out of the country, which they're maintaining for their own agricultural use and battery requirements. And then you have the largest known reserves in Morocco, which, yes, very good quality rock phosphate, but in end of April this year, I know the chart goes to March, but at the end of April, the price is still at $345 a tonne FOB from Morocco. That's a 500% increase in the last 3 years, and we really don't see a significant change in those prices for the foreseeable future. Now, a caveat to that is it's 30% grade, and we're working on 20 to 25% grade, so it's not completely comparing apples with apples, but nevertheless, it's still the main source of phosphate today for all agricultural markets globally. So we have those two critical points in our favour, and on top of that, the regenerative agriculture, I'll say, trend has gone beyond a trend, and it really is ingraining itself in the way farmers and I'll say companies operate and think. It goes beyond farmers, it goes into the food ingredients companies, it goes into the fertilizer companies, everyone associated with the agricultural supply chain is really looking at regenerative agriculture and to feed that with products like Fertoz is bringing to the market today. So the more that starts to snowball, the more companies we see investing in capital equipment to manufacture it, to a finished product that growers are able to use. And that's a big benefit to Fertoz. The more companies out there that are manufacturing the product allows us to really focus as a mining and a phosphate business to sell large volumes to these organizations that then have the distribution and the sales team on the ground to help spread that across the North American market in particular, as well as Australia. So we've got the macroeconomics really in our favor. And if you look, just to give you a bit of a proxy, we currently market our rock phosphate between $200 to $225 a tonne today in North America, relative to a price of 345 FOB out of Morocco. So we're in a really strong position and a very, I'll say, clear path towards being a more profitable organization. The other thing that's been a really big change in the organization, I'll say, is the product improvement that we've made. So rock phosphate is well known for being very slow to release its nutrients, the P2O5, but with additional elements like sulfur, silica, and humates, crushing it to a really fine powder that we're now able to do, and biologicals as well, we're able to speed up that release rate of the phosphorus for our customers to be guaranteed that they're getting what they pay for. So that's really starting to move along well. But I think even more importantly, and you'll see on the table on the right, as a company mining rock phosphate and crushing it to a powder, we've really got access to maybe 10% of the total market in North America. And I'm talking, let's say, growers, end users. So our main focus has been to target manufacturers that take our product, value add it, put it into a granulated form or a pelleted form, and then sell it to the grower. So there's some limitations obviously associated with that due to the number of manufacturers in the market today. As I just mentioned, that's increasing day by day, week by week. But in order for us to accelerate our business, we've really needed to provide something that the grower truly wants, that's convenient, because convenience is key in whatever happens in agriculture. And it also needs to bring true value for the price that we're charging. And so, as you know, we invested in a pelleting plant called Fertify back in August of last year when we first commissioned the building of the pelleting plant. And what that's doing for Fertoz and what it's about to do is we can now provide products direct to growers. We can provide them direct to distributors, and we can provide them direct to fertilizer co-ops. And what that does is that opens up the other 90% of the market that we've struggled to access in the past. So that creates a whole new game for us in terms of who we can target, where we can go, and what we can achieve. And so with that Fertify brand, being able to store it, being able to freight it, being able to spread it, apply it to the fields, and also being able to customize those blends is really gonna open up the entire market for us in a way that we haven't seen before. Now, we also get to operate at a higher price point because of the value-added benefits we're bringing to our customer. And we believe that's, again, going to put us in a really strong position as we try to take this, as we do take this company into a profitable phase, a positive cash flow situation based on the work that's been done over the last 12 months. So if we just go to the next slide, Nova, I'll explain our growth ambitions and how I believe we can get there. Because I think the first point to make, that may look like a fairly aggressive approach, and I won't say that it's not, given that we did 12,000 tonnes in 2022. But the first point there is just to highlight 320,000 tonnes of fertilizer, whether that's as Fertify or powder. It seems like a large figure, but in reality, it's only about 1.6 million acres of farmland. It varies depending on dry land or irrigated, but fundamentally, there's 50 million acres of hay and forage that we're targeting. There's 41 million acres just in Canada alone of farming, and there's 91 million acres of corn in the US. So I think it puts it into perspective that what we're trying to achieve here is not unrealistic at all. It's certainly a very, strong growth curve, but as a percentage of the market, we believe it's very much achievable over the next 3.5 years. How do we do that? Like I've just mentioned, Fertify opens up the market for us really significantly. It's an NPK, nitrogen, phosphorus, potassium product, all in one. It's regenerative. It's very cost effective. And I think a point that I always like to make, we could have taken two paths. We could have granulated, which is what a lot of the fertilizer is made, how it's made today, in a tiny little ball, or we've gone to a pelleting form, which is, it's a pellet, like a pencil, let's say, and chopped up into pieces. The difference between the two, granulation is $230 to $250 a ton to granulate. So you're adding that entire cost to the rock phosphate. From a pelleting perspective, we think it can be 1/4 of that. Now, we'll get better figures and a better understanding of our plant and its efficiencies, but fundamentally, there's a significant cost savings there. And we feel that in order to be competitive in the market and to move quickly, we need to remain cost conscious all the way through to our customers, and yet ensure that we're making strong profitability. The rock phosphate, as I said, we do and continue to sell to manufacturers, and we do sell direct to some growers. Certain growers have the right equipment and facilities to handle powder. Very few, but some of the very large corporate farms do. And there's significant savings in that approach as well for them. So as those customers start to develop, and like I mentioned, as more and more manufacturers come online, there's new pelleting companies, there's new granulation companies, and they're all looking to make regenerative and organic products for the majority of the work they do. So that's really going to help us to accelerate moving volume. And at the end of the day, as a rock phosphate mining company, it's a volume game, it's a commodity game, and that's what we're focused on, is moving those volumes. We also are looking at some potential opportunities from an export perspective, and we have the skills and expertise internally to do that. One of our sales members was working in that area, that trading global markets for 7 years, so it was very well connected. And we also have some potentially very good supply for certain markets globally. So that's also a very strong focus. And part of the reason is, when we start talking about export and export markets, we're really looking at minimum 30,000 tons per shipment, minimum, up to 120, up to 200,000 tons. So it's also another really nice way to generate the volumes and the sales that we're projecting here over the next 3.5 years. And one of the really fundamental things for us is to continue to focus on the 50% gross profit. The way in which we've addressed our processes, our cost of goods, our third parties, we've really worked towards, over the last 12 months, having a much more financially viable business model and ensuring that we achieve those 50% gross profits on whatever we're marketing in Northern America. So I'll give a little bit more background on that, on how we've done that. But I think, for me, the logical question that many shareholders would ask is, okay, well, do you have the deposits? Do you have the resource to be able to supply those types of forecasts? And when we look at the layout, working from Northern Canada down to Mexico, I can state that for Wapiti in Canada, we're looking at 3 bulk permits for 38,000 tons, which may get approved in 2023, but we will not be mining that until 2024. So the objective is to have those permits as soon as possible in preparation for 2024, because we have some offtake agreements that we can start to move that product through very quickly. At the same time, in 2024, the application would go in for a industrial mines permit, and we'd look to be targeting 100,000 tons per year for 5 years. And that allows us to extend it, to expand on it. And basically that goes up to 250,000 tons before we hit another level of threshold for the type of work that needs to be done with the authorities, the Ministry of Environment and Mines. We also know that we do have an inferred JORC resource for that particular area. It's only on 20% of our tenement, but it's come back at 1.54 million tons. So we know there's no shortage there. We know there's a lot more product there, but we're really focused on what we need to do today to be successful in the coming 3 to 4 years. At the same time, in Fernie, which is not far from the border of Montana in the US, we're targeting 13,000 metric tons this year out of Fernie through bulk sample permits. One of those has been approved. We're still waiting on another one. And we also have a third one in place, which is likely to be to be approved for 2024. As we're doing in Canada, we really want to get ahead of this game of bulk sample permits and start moving to these industrial mine permits and getting real volume, and volume that we can rely upon over the next few years without continually having to permit. And so those two initial locations are Barnes and Martin, where we'd be targeting a 50,000 and 100,000 tonne permit each year for the next 5 years, with the ability to expand on those and to add new industrial mine permits, whether it's for Crow's Nest or Pump Station, or these other tenements that we're developing right now. We're also working through a JORC exploration potential, which is tentatively showing 8 to 12 million tonnes. And we're looking to finalise that process and move into something more measured and indicated in due course. But at least to know that within that site around Fernie, there's a minimum of 8 to 12 million tonnes that we need to start working through from a JORC perspective. As we move into the US, in Deer Lodge right now, we have approximately 60,000 tonnes, either on the ground in our facilities or on the mountain in stockpile. So we can access that any time of the year, with the exception of probably 3 or 4 months in the winter period. We are also looking at a potential win for the organisation with another 250,000 tonne stockpile that's in the same location, or similar location, I should say. But we have to work through some due diligence on that before we're convinced that we have the right product at the right price and the right location. But we're really optimistic on how that looks, and we should have more information or a better understanding of that in the next 6 to 8 weeks, I would say. So that's a really interesting potential for us, given what it represents in sales. We think it's closer to 300,000, but if it's somewhere around that mark, you're looking at $50 to $60 million worth of inventory that we could access immediately. So some work to be done there, but really interesting potential for the organization. Monterrey, Mexico, it's a developing area, it's a developing mine. It's fairly limited today, I would say, in terms of its volumes, but the mine is under an expansion program right now, and they've identified where they believe are some very large deposits, and they'll be opening that up over the next 6 to 12 months. And that does help us because, as I mentioned, there's a number of pelleting and granulation companies that are existing either just in Mexico that we could utilize, or customers across the border that are looking for products. So we're really focused as well on expanding Mexico because of what it brings to the table. And then the export source, which remains confidential today, it's well in excess of those figures, we believe, but starting with 100,000 tonnes in 2024, moving into 200,000 tonnes in 2025, and then I believe it's significantly higher than that in 2026, based on the mine expansion and the JORC that it has. So that's a little bit about where the supply is going to come from and how we expect to achieve those sales forecasts that I mentioned earlier. Thanks, Nova. So just a brief update on carbon. I think it's often mentioned, you know, is carbon a distraction for the organization? Is it not? And I think today it's certainly not. It's very well structured. I will admit that I spend 90% of my time on the fertilizer business because that's the short term of where we're going to generate income. It's also how we're going to justify the business model we believe it's going to be very successful for the future. So I do spend the majority of my time on the fertilizer business, but that's also because, you know, we have a strong team on carbon and led by Les that's really advanced, I'd say. I won't say rapidly because it's a methodical process. And here you'll see the biodiversity studies that have been done, the carbon modeling, the costing forecast for the business and for the project. Everything's moving step by step, and it's moving in the right direction. We're really now focused on who is the right partner, who is the right funding partner, and how do we structure that moving forward in the market that we're currently focused on. And we believe there's been some really good steps forward in terms of who we've identified as potential partners based on their location, based on their funding capabilities, but also based on just their reputation within the market and their organizations, as well as the fact that they're going to be significant off-takers, we would imagine, based on the businesses that they're operating in. So we're expecting to be planting in Q4 of 2023. We do have 2,000 hectares already identified, and we have well over 50,000 hectares identified through letter of intents that have been signed. So it's really a little bit like, I'll say, the beginning of fertilizer. We've got to learn to walk before we can run, and hence the focus on 2,000 hectares and starting that planting towards the end of this year. But that's going to be a very significant, I'll say, milestone in the organization, because it really is just the beginning of what we think is possible and what we believe we're capable of. So again, very much focused on it with the right people and the right team in Fertoz, but knowing full well that there's a strong emphasis around fertilizer and making that a cash flow positive business and a profitable business for the future. So from a financial outlook, I sort of touched on some of these points, but a lot of the other work beyond just the team that I mentioned over the last 12 months has been revising all of our contracts and costings, making sure that we're really cutting out inefficiencies within the supply chain and in the processing. We've reviewed all of our pricing and fundamentally moved that to a base level that it has to be at for our business to be successful. And that was, I'll say, relatively easy, particularly given the market. We've brought on value-added products such as Fertify. And we're also really, I'd say, one of the main focuses today from the fertilizer business is improvements around logistics. We see some really nice, I'll say, nice improvements for our customer. We would pass these logistic savings on because all of our product is sold FOB, free on board. But anything we can do to reduce our logistics costs just makes our product that much more attractive. And so just toting it in bags, using different transport companies, different types of trailers is going to help significantly. And a complete review of our mining operations. We're going to be very, very focused on what we do moving forward from a mining perspective. And that's going to be a lot around what profitability does it bring to our organization, or what is it setting up strategically for the business in the future. So we're expecting really good, solid results in Q2 with the launch of Fertify, which will allow us to start targeting the delivery of the first 18,000 tonnes of forward orders. We're working on the bulk permits in Canada, as I mentioned, and we have generated our first income from carbon in agriculture in Canada this year. Now, I'd say it's not significant in value, but it's certainly significant in terms of milestones for the organization. It's not something a lot of companies have been able to achieve at this early stage of the carbon in agriculture period, but it's certainly putting us on the right path. And one of those paths I can say is it may not generate a lot of income in the early days, but what it's also doing is it's opening the doors up for a lot of our fertilizer sales. So we have partnered on 250,000 acres of regenerative ag with a multinational food ingredients company in Canada. And we're providing the carbon protocols for how those farmers manage that land. And we're also providing the fertilizer as another value add to their regenerative production. Clearly, the food ingredients company is using this to market to the various generations that respond to it, which I think is most these days. And it's also just a very first step. 25,000 acres in Canada with this food ingredients company is really a trial in some regards. Now, it's still 25,000 acres, so I don't want to be too dismissive, but it's more the potential of growth that this has for the organization. And they're one of 4 ingredients companies that we're talking to. And then, as I mentioned, the Southeast Asia reforestation project, it is advancing. And I do believe we're getting very close to having the right funding partners in place that will truly allow us to accelerate on this and start planting trees in the ground, which is what everyone's looking forward to. So overall outlook for 2023, and maybe a little bit repetitive here, but it's all about developing the market awareness of Fertoz in North America. You know, if we're realistic with ourselves, we are still a relatively small organization and company in North America. And every day people become more and more aware of what we're doing, who we are, and what we're trying to offer to the markets. And so in some regards, it's step by step. But the reality is this is one of the faster transitions I've seen in agriculture in my last 23 years of grower adoption of regenerative ag practices, whether that's carbon, whether that's fertilizer. I think it's certainly faster in fertilizer, but we're now becoming more well known across the market and what we have to offer. It's really a snowball effect, and we can see that happening on a week by week basis. The macroeconomics continue to support what we're trying to achieve, and I don't see that changing in any significant ways, other than most likely more government requirements around how people apply fertilizer, what types of fertilizer they use, etc. And I think a good example of that, and we all know, I can say that Europe is ahead of north a lot of the US in terms of agricultural practices, but in Europe they're now looking to enforce 30% of fertilizer applications must be organic fertilizer, and that's irrespective of whether you're a conventional farmer or an organic farmer. So there are a lot of things working in our favor. So we really want to target 10,000 tons in the first half of this year and accelerate that throughout the year to be achieving the 40,000 tons. Now, it's a big ask, there's no doubt about it, but we just see more and more customers coming on a weekly basis, looking at what we've got, explaining the investments that they've made in their own granulation plants, pelleting plants, and we can see that this transition is moving quickly. So we'd like to be cash flow positive in 2023. I think we've done a lot of work to ensure that that's going to be the case based around our investments, our spend, our burn rate. We've really cut out as much of the, I'll say, inefficiencies as we could in the organization, and at the same time increasing the value of the product that we bring to the market. So that is the objective in 2023, is to deliver the tonnage in a profitable and meaningful way and getting us ready to scale up to the next level of fertilizer development and nature-based carbon solutions in North America and Australasia. So I hope I didn't go on for too long then, but certainly open to any questions that people may have if the timing is right now.
Thanks, Daniel. Do we have anything online?
No questions online.
No questions online? No? Can I ask? Yeah, absolutely, John. Or Daniel, just ask him direct. He can hear you.
Yep, I can certainly hear.
So I'd like a little bit more elaboration on the point you're making about the granulation versus pelleting. You're saying you're going down the pelleting route because it's much more efficient in terms of cost effective.
Yes.
But surely that's true for your competitors also. So what is the attraction of granulation? Is that where the demand is?
Granulation, I think let me flip it the other way around. In order to granulate, for us to pellet straight rock phosphate does not work, because you don't have enough moisture and enough binding material to make that powder stick together for any longevity. The reason we've gone into pelleting is because we're adding manure. Today it's chicken litter, tomorrow it could be pig manure, it could be cow manure. But by having manure as one of your basis for your product, you can create a pellet very easily. If we wanted to just do straight rock phosphate, it would not work. We would have to granulate it, which is what we do today. But we're also of the view, and we often see it, that straight rock phosphate on its own doesn't bring enough solutions necessarily to the grower. So they always want to add in some potassium, a bit of nitrogen, maybe it's sulfur and silica. And so we've gone down that route because we have chicken litter or manure as a binder to make that pellet into a really high quality product. So it doesn't mean we won't granulate. It does mean that we use third parties for that today. It is less profitable because you start to create I'll say a cost-effective product that starts to become very expensive when you add $250 to a $225 product, and then you may want to add additional elements to it. So hence we've gone down the pelleting route, because we're able to do it.
Good, thanks for that. Concerning your price chart that you displayed, I noticed the price increase, the bulk of it occurred actually percentage terms, there was about 100% increase in price prior to the Ukraine war. And it's been about a 60% price increase since then on that chart. So what was the reason for the increase prior to the war starting?
That was COVID. A lot of it was driven by COVID, logistics costs, freight costs, transportation costs, and I can't say energy costs, but it was predominantly around that. But there was also, I think, even bigger than that was China stopping their export. Even though China may not have the largest resource in the world, they were trading as probably the largest or second largest traders in the world. So when the Chinese stopped during COVID, that's what caused one of the initial spikes in prices. It was between China stopping their exports completely and the logistical costs of sea freight and inland freight went through the roof as well.
Fair to say China has stayed out of the market post-COVID with their exports.
Yes.
So I think there's internal pressure there for food, fertilizer, key component to grow. And secondly, their lithium phosphate ion battery business, they've actually publicly said they want to retain phosphate reserves as a critical mineral for that emerging business. So there's twin pressures on China as one of the biggest exporters of product. Do they stay out of the market indefinitely? It's hard to know, Daniel, and they're not going to tell us. We'll find out about it. But right now they're out of the market, so it's kept those prices more buoyant. Morocco being this really arguably the sole supplier globally to an export product. And their price is reflecting that. That Morocco 30% is the global benchmark price. Everybody looks at that as a guide. And what we do, John, is we take that 30% divisible by our 22%, and that just is our check that we're pricing right. It's fair to say, Daniel, prior to your arriving, I don't think we had our pricing right either, John. We were slow at moving it up. We've reset all that since Daniel's arrived. There's been some pretty robust discussions with our manufacturers, to your point, that granulate this product, about having to move their prices up to customers because we're moving the cost of goods up to them, which is good for us. So we wholesale largely to address that granulated market. We wholesale that to the manufacturer. That's one business we've got. The business that'll get us a lot more volume, of course, is what Daniel talked about, Fertify. We've added value by adding all the various elements in there that are more than just rock. And again, the pricing was on that slide for Fertify. It's well higher than the straight rock phosphate, naturally, because it's got the added product. And it's fair to say we want to emphasise that because without forecasting this too loudly, our profit margins are improved on that value-add product, that pelleted product, over, say, straight rock. Sorry, Daniel, but...
No, I think that sums it up quite well, Stuart. And I think, one of the big focuses in the first 6 months for me was to get a real handle on the true cost of goods. And there was too many variabilities and too many potential ifs and buts. And we've really streamlined that, particularly with our third parties, to say, listen, there's one process and there's one cost, irrespective of what happens. And so we've been able to get a much closer handle on what our cost of goods truly is. And that's also allowed me to be, I'll say, somewhat aggressive in the pricing, but relative to the rest of the market and the fertilizer world, it's no more aggressive than what anyone else has done. We were just late to the market on making those changes. And that's something I think I changed in the first 6 weeks I was here. And then there was another price increase at the start of January of 2022. So I'm much more comfortable on every ton of phosphate that goes out of our facility is making money, when historically that was not the case.
It's a big difference. A fairly important one.
Yeah.
I wanted to ask something about the EU regulations you mentioned.
Yes.
So the Ukraine, Belarus supply, is that organic or?
No. I mean, look, there's organic supplies, but fundamentally, most of what's coming out of Ukraine and Russia has been nitrogen and phosphorus. I mean, there's bits and pieces of everything, but that's certainly created a lot of anxiety in the EU, no doubt, because they've realised how dependent they are on fertiliser from either North Africa or the Middle East. And I think it's no different to any industry. What COVID has done and what the Ukraine-Russia war has done is it's really highlighted some of the fundamentals of society and how we feed our populations. And so I don't think that's necessarily influenced the organic push by the EU. That's purely an environmental push, not necessarily related to the political issues going on.
Yeah, I just was wondering what are their sources of organic phosphate or potential sources?
Potentially, it could be coming out of Morocco as well. They have the potential to mine organic rock phosphate. It's also coming out of Germany and parts of Lithuania, but it's not a huge product for them today. I mean, it's certainly growing towards that, but they have the ability to pull that out of North America, as well as countries within Europe, because it's still a smaller volume. I mean, we've been in discussions with some companies in Spain, but I think fundamentally our cost of goods to get it there versus North Africa, it's not possible for us to compete.
John, we'd still argue that Fertoz is leading the organic charge in North America, but equally that'll be Europe, because there isn't a dominant player in Europe in organics. There is probably down, Daniel, more in the greenhouse space where it's liquid fertilizer, and there's quite a bit in organics in that. You know, the Scots companies, Scots Miracle Grow, those type of products are into liquid fertilizers for the home gardener, market garden space. Not a lot in broad acres, and certainly in North America. Daniel, it's fair to say we see ourselves as a market leader in organics, but you know, this whole regenerative push, not without now the awareness of the majors though. So the Nutrients and Mosaics, the two biggest fertilizer companies in the world, they're well aware of our push. They're watching it, but they haven't gone down into that space yet. It's not to say they won't. And all of their rocks, either from their own mines in Florida, Peru, imported from Morocco, that's how they bring their rock in, but they add chemicals to it. It's, you know, they make a DAP or a map that feeds the world, arguably, but it's there is a trend away from it, and there's no doubt we're leading it. And we've got some pretty aggressive volume targets there, but the market's waking up to the, not just a tag organic, the being certified organic, which we are, is a very useful tag, but it's just this whole regenerative approach. So even conventional farmers are saying, I want to remove chemicals, because food groups are doing programs that say, we'll pay you a premium for your off-farm product if you desist on using chemicals in the production of it. That's what this program is already with this food group. We can't name them, but it's one of the big US food groups or Canadian food groups. And we're seeing that with Woolworths and Coles and their branding here in Australia now, you know, regeneratively or without chemicals or organic. Organic's a word that gets tossed around too easily, I think, and the labelling of food's going to have to tighten up on that. But I think it's embryonic still. Even our volumes are small, but they're big to a company like Fertoz if we can achieve them.
But a big part of that growth from your projection was for, say, 2026, was in exports. If you say the freight charges mean you're not really competitive with Moroccan or East European, you know, Southeast European.
There's two things I'd say on that is, you know, when I was talking about that, I was just comparing Spain with, you know, they're probably one of the more advanced organic areas within Europe, along with France and Switzerland, and they're tiny, but that's competing directly with, you know, Spain if the product was to go there. When we talk about export, we're talking about, I won't disclose where the location is, but also where it's going. So where we're looking to source from and where we're looking to sell to, we do remain very, very competitive. It was more just in reflection of comparing Spain sourcing out of North America versus sourcing from us. So where we look to export, it's not really going to be targeting Europe in the initial phases. We've got other markets that we're going to target, but it wouldn't disclose us from going to Europe at some point in time based on our supply and where it's coming from.
Just got to look at geography, John, in the sense of saying, well, let's just assume for a moment it might come out of our Canadian deposits. We've got to get it across continental North America before we can put it onto a ship to Europe. That land cost is still tricky. We've still got to work that out ourselves, or the market's got to come to us on better prices. But there are other markets off the West Coast that one could deal with that are more attractive. The world is short of phosphate because of the China scenario and now the Belarus, Ukraine. So they're coming. It's fair to say, Daniel, they're coming to us. We've got deposits. Without disclosing where we'll pull it out at the moment, because there's a competitive advantage to all this, we don't want to say too much. But gee, there's some volumes required on the marketplace. We just got to be able to logistically solve that solution, make it price competitive. If we can fix logistics, then you can sell what the demand will be. But it's all about making. And Daniel mentioned it. If we can get that logistics equation right, we're far more attractive to the buyer. We'll pass those cost savings on. We'll make money selling rock. Every time we manufacture it now, we'll make money. And that was the hard work Daniel did with the team for the last 9 months. He's really dug into all those mining, screening, crushing, processing our ore to get those contracts really tight. So we wore the benefit of the margin, not the manufacturer, who, it's fair to say, we're probably passing on cost overruns, and COVID was smashing them and us in a lot of parts. A lot of that's passed on to us. We've pushed back on all that now, rewritten those contracts. And I think it's fair to say, Daniel used the comment, we're not shipping 1 tonne of ore now unless we're making the margin we've targeted. Just won't go. Customer
Correct.
Won't pay that price, we're not supplying it. So it's good. Well, we've got to turn money on every dollar. There's no point turning it over, John, which I think we have in the past. We've moved reasonable volumes, nowhere near the 40,000 tonnes. So in 2022, disappointing year. I think we've reported that in our annual report, but it was 12,000 tonnes for the group. But a lot of that was stock outs in Canada. We've got to get permitting better, and we've got our costs under control now if we can move the volume.
Yeah, I think sometimes with startups, there's a feeling that you've got to get a foot in the door with customers.
Yep.
And you pay a price for that.
And I think, John, that is quite often a truism. But in our case, the market shifted to assist us, where the market's demand-led or demand pulled, if you like, rather than supply pushed. So, and fertilizer supply pushed. Daniel's done a hell of a lot of marketing on that fertilizer product to make people aware of what we've got. And we've stayed in very close. That's been manufactured in Montana. We've stayed in very close. Correct me, Daniel, but do you want to just run through the states there so I don't get them wrong? But it's in close to that plant.
Yeah, no, everything we do, we try to keep as close proximity to the mine site as possible, because that's obviously, once we start leaving the mine site, we start incurring costs. So the pelleting plant is in Kinsey in Montana, which is 4 hours from our mine site and our crushing facilities. But it allows us to service North Dakota, South Dakota, Wyoming, Montana, Idaho, Oregon, and Washington, and keep us competitive. Now, if we start going, some of the organic customers, we're moving tonnage all the way to the East Coast at the moment into Pennsylvania and New York. I'm not going to say that's normal, but for organic growers, when they can't find products, they're prepared to pay excessive logistics costs at the moment to get that, because there's such a limitation on what's available to the market. So we just want to keep looking to provide, more cost-effective ways to get that product to market, and keep the customer base as broad and far and wide as we possibly can.